Hello, this is Cal Burgess with Custom Insured. I want to thank each and every one of you for joining this webinar today, where we're going to discuss group health plans and how you can customize the plans to your employees' individual needs or your company's culture. You can find us online at custominsured.com or on Facebook at Health Insurance ATX. We have educational content that ranges from podcasts to educational videos to external links on any subjects pertinent to the healthcare industry. So, before we jump into the brass tacks of about what different options are available for group health plans, I wanted to address a few questions that you want to ask yourself throughout this webinar to help surface what kind of coverage you may or may not need. The first question is, how many employees are you wanting to offer health insurance to? If you're a subcontractor, we can just cover yourself only. Or if you have a small business of 10 or 15, we can cover one employee or all 15. We don't have any restrictions that you have to adhere to, which we're going to address in the following slides. Question number 2, how much would you pay towards each employee's plan if you could choose any amount? Well, the traditional plans or the ACA plans require a minimum participation of 50% for the employer, meaning each employer has to pay 50% of each employee's plan, regardless of what plan they choose. So we can work with that and get that percentage lowered based on what your needs are. But what would be the percentage if you could choose any percentage out there? Would it be 20%, 50%, or 100%? And once again, what percent would you offer what employees? Question number 3, do you have a budget in mind? If so, what's the average premium and deductible you want your employees to be charged? And are you okay with that? The reason why we put that question in there is that most small businesses will pass on group plans because they believe that the door is shut. There's all kinds of restrictions that we're going to talk about next. So the ones that do sign up, they're usually taking the bare bones or the minimum coverage available, which in turn maximizes the out-of-pocket expense for the employee. So the traditional plans today at a bronze level HMO is going to require $6,000 to $7,000 out of pocket plus co-insurance. Truth be told, most employees can't come out of pocket more than $500, let alone $6,000 or $7,000. So that's what we have, or that's why we created this webinar, to show you how to eliminate that out-of-pocket expense down to maybe $50 or $100 out of pocket with everything else covered. So with that being said, I want to address the different options that are available for group plans out there. There's 3 main ones. There's a traditional group plans that are still being offered today. They take about 98% of the market up as far as group plans are concerned. Number 2 are private plans that seem to work best for small businesses, and we'll get to that next. And then last but not least, a hybrid or a combination between the ACA group plans and private, which we'll address as well. So going into the pros of the traditional type plans or the ACA plans, any full-time employees can participate, and benefits can be changed depending on what kind of employee you're dealing with. You may have a standard package for your average employee, and then maybe a premium package for the officers of your company, depending on what your culture is and how you have it set up. Now, with that being said, there are a few restrictions that make it very difficult for small businesses to embrace this type of coverage. There's minimum participation percentages, meaning that at least 80% of your employees have to say they're going to take the insurance before it can be offered. There's 1 or 2 small exceptions to this, but for the most part, that's the general rule. In addition, there's a minimum number of employees, typically 3 to 5, that will be required to sign up before you can offer any coverage at all. Then we're talking about COBRA limitations. If a employee leaves your company for whatever reason, their option is COBRA at that time, which is usually an 18-month plan much more expensive than what they were paying before, that can put them in a big financial bind depending on what kind of coverage options they have. And then last but not least, mandatory employer participation. All of these plans require that the employer pay at minimum 50% of all the premiums for each employee. Now, you're allowed to pay more, but as a general rule, they don't want you paying less than that. So, moving along to the private side, a lot of it is the exact opposite, or this plan has all the flexibility that the traditional means don't. What I mean by that is we have PPO nationwide networks, what we refer to as shadow insurance, which shadows the employee wherever they want to go. So they can choose any ER, doctor, surgeon, family practitioner they choose, and they're able to keep the same doctors that they have. They don't have to set up a new HMO network or go to a different doctor across the street. The biggest advantage of these plans, of the private plans, is that there is no participation restrictions. Now, this part is huge, so we don't care if one employee signs up or all the employees sign up. Furthermore, we don't have a minimum number of employees that need to sign up before we issue coverage. And thirdly, we don't care if the employer pays $1 or all the dollars for the employee premiums. Now, of course, we do recommend that they do pay more than not as far as the premiums are concerned, because at the end of the day, this is a benefit to keep long-term employees with your company and not going across the street for better benefits. So, with that being said, we'll move on along to the hybrid plan, which is a combination between the ACA and private. So let's just say someone's very sick. What we can do is offer them an ACA plan and give them great accidental coverage, allowing them to use any ER they want. Now, depending on what kind of issues we're dealing with, what kind of sickness or what kind of health issues we have, will depend on what kind of recommendations or how that hybrid is weighted. That's on a case-by-case basis. Typically, the private plan can insure 95 to 98% of small business plans out there, where the hybrid plan comes into play for those who have pre-existing conditions or sicknesses that they're being treated for, or medication they're taking along the way. So, with these three different plans, which one do you think works best for your group health needs? If you do have an ACA plan in play, then you probably only have one, if any, of the benefits listed below. So these are all the benefits that the private plans bring for individuals, or excuse me, for small businesses and employees, as opposed to offering the traditional plans for large companies that work better for a massive amount of employees. The first one is unlimited networks. We talked about that earlier, expanded PPOs and shadow insurance. Next, we have first dollar payments on most all claims. This includes all surgeries. This includes all hospitalization, all outpatient, and most all accidents that you're going to encounter. Next, we have no employee minimum. Either one or all the employees can participate. With the ACA, you have to have 80% before you can even sign up, and there has to be at least 3 to 5 before they'll even let you sign anyone up. Moving along, we can customize employees' options to meet their needs any time of year. Meaning, with your permission, we can allow the employee to add or take away coverage that they see fit as time goes on, depending on what kind of coverage they need, or if it's allergy season, they may want to add on more outpatient to be able to see an allergy doctor to help prevent against flare-ups from what I call the allergy capital of the world, Austin, Texas. And last but not least, pay employee premiums at your discretion. So you can pay 1% of the employee premiums, or you can pay all the premiums. We don't have a minimum like traditional means require you to pay 50%. We don't have any of that. Now, we do recommend you pay more than not, because once again, this is a These are employee benefits designed to, capture longevity of an employee and, limit your overhead or costs of training new employees. So with that being said, let's go ahead and take a look at what a group plan ACA is and how that works for small businesses. Typically, these are one size fits all PPO or HMO networks, meaning after the deductible is met, whatever that deductible is that corresponds with the metal you have or you metal you have. Let me clarify. So each plan is based on which metallic coverage you have. So the bronze is the base going all the way up to the platinum. As you go up each level, your deductible goes down and your premiums go up. Now you can either have a PPO network or an HMO network. A PPO will let you use most doctors and hospitals out there, or an HMO is a much more condensed version. You may only have access to 2 or 3 doctors and 1 or 2 different hospitals out there. Now, the deductibles and premiums are depending on what kind of a group plan that you have. Most of the plans out there for small businesses are bronze because those are the cheapest ones and the ones that most small businesses can afford. Unfortunately, they have the highest out-of-pocket expense for the employees, and of course, as we discussed just a couple minutes ago, each level you move up with respect to the metal limits your or lowers your deductible and increases your premiums. So once again, the number one plan we see out there for small businesses, if they have any insurance set up, is a bronze HMO. Our plans typically come in about 30% cheaper, allowing any network you want out there. So that's how the ACA comes together. From here, what I want to do is discuss the benefits of the private plan compared to the ACA plan for small businesses to really paint the picture of what we can do for small businesses. Our plans work by issuing multiple policies that act unilaterally or create a web of protection for each of your employees. Typically, we break down the policies into 5 or more policies. And these policies, if you look at the top left here, is either catastrophic and accidental, along with outpatient to the right, and the bottom left, hospitalization and surgery. Between all of those policies, we can eat up most, if not all, the out-of-pocket expenses as each one pays independently. So what that means is, depending on what kind of a claim you have, you may have 1, 2, or 3 policies paying out simultaneously. And just because policies 1 and 2 pay doesn't mean that policy 3 is off the hook. Now, when you go make a claim, you don't have to give them 5 different cards. This is how we break it down behind closed doors to be able to eat up all the out-of-pocket expense. Another visual you may want to look at is if you take an ACA policy, once you pay the deductible, the policy pays the rest, assuming you're a network. Well, think of it this way. If you break up the policy into individual pieces, you can add as much coverage as you want or take away as much coverage as you want. This strategy allows us to do that. So because of this, we can customize insurance solutions for any budget or coverage necessary. We can give a standard package for the employees while giving a premium package for owners or, say, officers of a company. So take a closer look at how our plans work. What we try to do is put the catastrophic and accidental as the main umbrella type coverage, and under the umbrella giving hospitalization and surgery. We'll cover you for any 24 hours you spend in the hospital. Doesn't matter why. We'll go ahead and cover that with no deductible or no out-of-pocket expense. We also give you 2 outpatient surgeries per year. These can be anything from appendicitis to maybe removing a kidney stone, etc. Any surgical procedure that's outpatient. Now, for the major surgeries, they usually happen when there's an accident or a catastrophic disease involved, and each of our catastrophic and accidental policies inside the umbrella above have their own surgery schedule. So in that case, all the surgeries would double up to cover all the costs. Now, moving on, our outpatient and preventative coverage gives you 4 visits per year, and we cover everything from MRIs to CAT scans to prescription drugs. We even cover preventative measures like annual exams, pap smears, mammograms, etc. Now, if your employee, or excuse me, if you want, you can add on dental vision insurance as well. This gives 2 visits to the dentist and 1 visit to the optometrist per year. And believe it or not, the optometrist pays along with the outpatient. So if you're going to your eye visit every year and seeing 2 dentists every year or 2 dentist visits every year, then I highly recommend you add this on. For all dental claims, we're going to pay 60% on all major issues except for cosmetic, and we give allowances for glasses, frames, contacts, lenses, etc. So this is what our standard package looks like and how it all comes together. So once again, all these plans are customized, designed to eat up all your out-of-pocket expense, typically 30% plus cheaper than the traditional HMO bronze plan, which is the bare essentials of the ACA or traditional means. So, with that being said, I do appreciate everyone taking the time to watch this webinar. We're going to open up for questions here in just a couple of minutes. In the meantime, if anything, if you have any specific issues you want addressed, or you want to set up a one-on-one consultation via phone, face-to-face, or webinar, please email me at calb@custominsured.com. Either myself or my business partner, Dimic Robertson, will get right back to you. And as we discussed at the beginning of the webinar, you can also find us online at custominsured.com or on Facebook at Health Insurance ATX. Thank you so much for listening. We're going to start questions here in just a minute. And this is Cal Burgess signing off.